Assalamualaikum warahmatullahi wabarakatuh. I'm Rayanta Femadivi, an accounting student class F. Now, I'd like to explain you about corporations, Chapter 4. This corporation is a part of Accounting Principle 2 by Elizabeth Minbiole. So, talking about the characteristic of a corporation. And so, the first thing we have to know about corporation is the characteristic of a corporation. What is a characteristic of corporation? There is a number of characteristics distinguishes a corporation from a sole proprietor or partnership. And so, unlimited life. As a corporation is owned by stockholders and managed by employees, the sale of stock, that of stockholder, or inability of an employee to function does not impact the continuous life of the corporation. Its charter may limit the corporation's life, although the corporation may continue if the charter is extended. Limited liability. The liability of stockholders is limited to the amount each has invested in the corporation. Personal assets of stockholders are not available to creditors or lenders seeking payment of amounts owed by the corporation. Creditors are limited to corporate assets for satisfaction in their claims. Separate legal entity. The corporation is considered a separate legal entity conducting business in its own name. Therefore, corporations may own property, enter into binding contracts, borrow money, sue and be sued, and pay tax. Stockholders are agents for the corporation only if they are also employees or designate as agents. Relative ease of transferring ownership rights. A person who buys stock in a corporation is called a stockholder and receives a stock certificate indicating the number of shares of the companies she or he has purchased. Particularly, in a public company, the stock can be easily transferred in part or total at the discretion of the stockholder. And then provisional management. Investors and corporate need not actively manage the business, as most corporations hire provisional managers to operate the business. The investors vote on the board of directors who are responsible for hiring management. Then is of capital acquisition. And then is of capital acquisition. A corporation can obtain capital by selling stock or bonds. This gives the corporation a large pool of resources because it is not limited to the sources of a small number of individuals. And government regulations. The sale of stock results in government's regulation to protect stockholders, the owners of the corporations. State laws usually include requirements for issuing stock and distributions to stockholders. The federal securities laws also govern the sale of stock. Publicly held companies where stock traded on exchange are required to file their financial statement and additional information enclosures with the Securities and Exchange Commission. Stock terminology. Talking about stock terminology, we have to understand about some definition that is included in this topic that are authorized stock, issued stock, outstanding stock, threshold stock, market value, par value, contributed capital, no par value stock, state value, common stock, preferred stock, dividends, stockholders' equity, and retired earnings. Okay, what is authorized stock? Authorized stock that is the type of number of shares of stock a corporation may sell and issue stock. Issue stock is the number of shares transferred to stockholders in exchange for cash, assets, or service rendered. Outstanding stock is issued stock that is held by stockholders and has not been bought back by the corporation. Treasury stock, issued stock that has been bought back by the corporation. And then market value is the price set by interested buyers and sellers for stock of publicly traded companies. Par value is the value assigned in the corporation's article of incorporation to one share of stock. And then contributed capital is also called paid in capital. It's the amount of value received by the corporation when it issues its stock. And then no par value stock is shares of stock that don't include a par value. And then state value is the value assigned to no par value stock by the board of directors of corporations. Common stock is the class of stock issued most frequently by a corporation. Common stock ownership normally includes the right to vote on stockholders' matter, to receive dividends only after preferred stockholder, and in the event of liquidation, to receive their investment back if anything remaining after the creditor were paid and if investment of the preferred stockholders was returned to them. And then preferred stock is a class of stock that normally has the right to receive dividends, and in the case of liquidation of the corporations, a return of investment before the common stockholders. Dividends. A dividend is a distribution by a corporate to its owners in the form of cash, assets, or the company stock. Stockholders' equity. In a corporation's balance sheet, the owner's equity section is called stockholders' equity. It includes the contributed capital accounts and retained earnings. And the last one, retained earnings, is the amount of net income the corporation has earned since it began in business that has not been distributed as dividends to its stockholders. Okay, guys, that's all about my explanation. I hope this video can be useful for you. And for less and more, I do apologize. So, thank you for watching. Assalamualaikum warahmatullahi wabarakatuh.